What? Didn't you need like loads of cash to buy real estate? Well, what if I tell you I buy real estate with just $100?
And that's actually now a very low price. In fact, if you have any of them available, I'd like to...
I buy real estate with just $100. Earn rental money and wait for it. Pay zero taxes on that rental income.
I don't want to pay tax.
And who are my tenants? Well, they are normal families, but also some big tenants. And by big, I mean big, like Amazon, Vodafone, Walmart, and even weed growers. And in today's video, I am going to share how I invest in real estate. And is it still a good time to start investing with real estate while the whole world is turning upside down with the worries of inflation coming? Hello everyone, I am Ajinkya Patil and today let's talk about how I invest in real estate with just $100 to earn rental money, how I choose my investments and pay zero taxes on the rental income. And finally, with the inflation coming, is it a good time to start with real estate investing? All that you have to do in return is hit that like button and subscribe to my channel so that we can get started. One reason real estate is an attractive investment is because it's an income producing asset. So you of course make money when real estate prices go up and you sell a property, but you also make money without even selling it because every month you can get rental income, and that is why real estate is an income producing asset. Generally speaking, real estate is a game of rich people because you need a lot of cash to start with this game. If you want to buy a house to rent it out, you need anywhere between 20 to 50% as a down payment. So if you want to buy something that is worth $300,000, you will need about $60,000 to $150,000 as a down payment before you can buy that house. And most of us don't have that kind of money lying in our bank accounts or under our pillows. Then how do I buy real estate with just $100? It is with REITs or real estate investment trusts. REITs were created so that the benefits of real estate investing can be made accessible to anyone and everyone. REITs are companies that make money from real estate. So they might own a lot of properties and rent them out to make money, or they might make money on interest on mortgages. You can invest in real estate by simply buying share of such a company. By buying a share, you are actually claiming a slice of ownership, and that share can be for as little as $100. And this is how I invest in real estate with just $100. Do I earn rental income? Yes, absolutely. When REITs make money from rents, they transfer that towards their shareholders as dividends. So you earn rental income as dividends. And in many countries, REITs are required to transfer 90% or more of their income towards shareholders. So in other words, you can earn pretty good rental income. Who are my tenants? Those could be normal families that rent houses that are owned by REITs, but that's not all. Some REITs specialize in warehouses and earn money, for example, from Amazon. Some own data centers, earning money from Facebook and Google. Some own telephone towers, earning money from Vodafone. And some own greenhouses that are specialized for producing marijuana, so earning rent from weed growers. So you see, the definition of real estate is pretty broad, and you can earn rental money from residential houses to warehouses to data centers to greenhouses for marijuana. Can this be done anywhere in the world? Yes, there are at least 39 countries where REITs exist. Since 1960 in the US, since 1969 in the Netherlands, 2007 in the UK, and since 2014 in India. Each country defines its own conditions as to what qualifies as a REIT, but typically speaking, they look like this. REITs don't pay any income tax, and for that, they must follow certain conditions, such as 90% of their income must be transferred to shareholders. 75% of their income should be from real estate. 75% of their assets should be in real estate, and so on. If you want to know about REITs in specific countries, then this document from PwC is a good resource. It lists what qualifies as a REIT in different countries. It also lists what are the requirements about dividend distributions and taxes. I will leave the link below to this document in the description. How do I choose my REIT investments? Ideally, you want a REIT that generates good profits but also grows in value with time. That way you will make good dividend income, but also the share value will grow. Then you will enjoy both benefits of real estate investing, cash flows and appreciation. You could pick certain REITs based on their financials management track record, and portfolio. Or you could simply do as I do and invest in REIT ETFs. With an ETF or exchange traded fund, I don't invest in one particular REIT, but I might invest in, say, 300 largest REITs all over the world. That way, I wouldn't have to choose which sector or which geography will do better in the future because I simply don't know. For example, in the corona times, REITs with shopping complexes may not have done so well, but REITs with data centers might have done extremely well. But I wouldn't have to worry about this because I have them all in my portfolio with a simple ETF. iShares Global REIT ETF is one such example. With this ETF, you can invest in 315 REITs around the world, starting with simply about $28. The expense ratio or the fee of this ETF is 0.14%. That is, if you invest $1,000, you'll pay only $1.4 per year as a fee. You can check their performance in the past. You can also check their distribution across geographies and sectors. For example, they invest about 67% of their assets in United States and the rest in Japan, UK, and so on. And they invest in retail, industrial, residential, office spaces, healthcare, REITs, and so on. In short, what makes REITs good investments? They allow investing in real estate with very little capital. Their long-term gains have been impressive, often beating stock market and other asset classes. They allow easy diversification. Imagine you were to save up $100,000 to put into a house. You are actually putting all your eggs in one basket. What if something goes wrong with that property or the prices of properties in that area fall? You risk losing all that money. But if you were to invest in REIT, you are investing across multiple properties, perhaps thousands across geographies and sectors. That reduces your risk. REITs also make real estate investments liquid. We can sell or buy REIT shares in seconds, but buying or selling a house can take months. And finally, you won't have to worry about property management. You won't have a tenant calling you in the middle of the night about some leakage. You will have best property managers around the world working for you. How do I pay zero taxes on the rental income I get via REITs? It is very important to consider your taxes when it comes to REITs. Otherwise, your returns won't be as good. So let's talk about taxes. REITs themselves don't have to pay any income tax. Of course, the tax office is not going to give you a free pass so easily. So the dividends that are earned from REITs are often taxed at a higher rate than other dividends. It is important to consider taxation in the United States in this case because that's where the largest REITs are. In the United States, income from dividends of REITs is considered as a part of normal or ordinary income, and that is why it's often taxed at the highest tax bracket, as high as 37%, whereas any other dividends such as from AT&T are considered qualified income and are taxed at 0, 15 and maximum 20%. If you don't live in United States, then your taxation is determined by a treaty between your country and United States. And it might be lower, but it won't be zero. You can check it out in this document, for which the link below is again in the description. There are still 3 ways you can pay zero taxes on your REIT dividends. Check which ones are applicable to you. The first one is to hold your REIT investments in retirement accounts, such as a pension fund. Then you pay zero taxes. The second one, which might not be applicable to everyone, but some countries have tax exempt savings accounts, such as ISA in the UK. And the third one is to credit your dividend taxes on some other taxes. Let me explain. For example, here in the Netherlands, we have asset or wealth tax. Any investment in a REIT would be considered an asset, and you would pay an asset tax on it whether you have dividends or not. But paying that 15% withholding dividend tax in the United States is then double taxation. Therefore, you can credit it or subtract it from your asset tax. This is how you pay basically zero tax on your dividends. What about inflation? Is it now a good time to invest in real estate? You might have seen it in the news. Inflation is coming. It's going to raise interest rates, and the way media and the stock market is reacting is as if it's the end of the world. Is it then a good idea to invest in real estate now? The worry is that as economies open up after the pandemic, there will be more demand for everything. The higher demand will drive higher prices and thus inflation. Central banks around the world have been saying that the inflation will be temporary and they don't intend to raise interest rates. But investors are worried, and that's why the big sell-off in the recent weeks. So how does this situation affect REITs? Inflation might mean higher rents. That will increase the profitability of REITs. But if the interest rates rise, that will also increase the borrowing costs for REITs and thus lower profitability. Historically speaking, REITs have done well in high inflation times. Some professional investors are even suggesting REITs as a way to reduce risk in higher inflation times. And some don't agree because of higher interest rates. In the end, who knows when the interest rates will rise, how much they will rise, and for how long. So, the best strategy for someone like me is to invest regularly, long term, and in a broad diversified ETF. By investing regularly, you reduce the risk of buying only at peaks and losing out on lows because anyway, we can't predict when those peaks and lows will happen. By investing long term, one can overcome the short term ups and downs in the market and that way enjoy from the long term high returns that REITs offer. Also, by investing in broad diversified ETFs, you diversify your portfolio and also reduce the risk that certain sectors or geographies might not do that well. Note that this video is for information and entertainment purposes only. No financial advice is intended. If you like this video, then hit that like button, subscribe to my channel, and check out some of my other videos on personal finance.